Jeff Bezos once paid $0 in income tax. Elon Musk, same thing. Meanwhile, you bought a sandwich and somehow paid tax on the bread, the mayo, and the air inside it. How is that possible? Are they breaking the rules? Today I'll show you exactly how the rich avoid taxes, how the system actually works, and what you can learn from it, even if you're not launching rockets or sipping wine on a yacht in the south of France. First, here's what they will never tell you. The rich don't like income. Not because they don't like money, but because income gets taxed the hardest. When you earn a paycheck, you're taxed upfront. Everyone gets a slice before you even smell your money. But the rich, they don't earn wages, they earn wealth. They hold stocks, own businesses, buy real estate, things that grow in value quietly, like a chia pet of money. But until they sell, they don't owe a single dollar in taxes. In short, you earn and get taxed. They invest and chill. So how do they buy Bentleys and luxury mansions if they never sell anything? Simple. They borrow. Let's say you have $50 million in stocks. Instead of selling and paying millions in tax, you go to the bank and say, "Hey, I'd like to borrow $5 million. My stock is the collateral." The bank says, "No problem, Mr. Billionaire. Here's your money. You just got tax-free cash, low interest rates, and your investments keep growing untouched." This is called buy, borrow, die. Step 1. Buy assets. Step 2. Borrow against them to live tax-free. Step 3. Die and pass it on through a trust so the tax bill finally vanishes. It's not a loophole, it's a blueprint. If the tax code were a video game, real estate is the cheat code. Here's why. Let's say you buy a rental property, you collect $3,000 a month in rent. Awesome. But on paper, you're losing money. Thanks to a thing called depreciation, you can legally claim your property is wearing out, even as it goes up in value. Translation: you make money, tell the government you're poor, and they say, "Wow, so brave. No taxes for you." You can even write off repairs, interest on the loan, insurance, and more. Landlords cry poor on paper while laughing in cash. Here's the next power move. Start a business, any business. Because business owners live in a different tax reality. One where things like your phone bill, your laptop, your lunch, even your Netflix account become legit business expenses. When the rich spend money, they don't just spend it, they deduct it. Here's how. The average person buys anything. The rich, they just tell that their business buys it. And if you work from home, you can even deduct part of your rent, internet, electricity, and that overpriced chair you convinced yourself was ergonomic. Okay, reality check. You're not Bezos yet, but here's what you can do actually today. Number 1, start a small side hustle or online business. Even part-time, it opens the door to deductions. Number 2, invest in assets, not just fluff. Stocks, ETFs, real estate. Let your money grow without growing your tax bill. Number 3, use tax advantages accounts if you're self-employed. Number 4, track every expense. Seriously, treat your money like it matters. The rich didn't hack the game, they just read the instruction manual, while the rest of us clicked accept terms and conditions and hope for the best. So no, the system isn't fair, but it is quite learnable. If you want to know more topics like this, feel free to subscribe because we're just getting started. See you in the next one.